Hello, hello, hello. Happy Thursday, everyone. How is everyone doing today? Good morning, Patrick. Good morning, Jacob. Good morning, Heinrich. Good morning, Christoph. Good morning, people hiding in the background who watch but don't chime in on the chat. Thank you for being here. So, interesting day. Bank of England hiked 25 basis points, but sounds pretty dovish. Dovish, good morning. Options 22. Bank of Japan's intervened with bond buying, but really not making a dent. That's the key thing I am paying attention to right now, as well as the increase in the 10-year yields. Good morning, Connor. So we got finally a pullback yesterday. Is it over already? We will see. Qualcomm, PayPal drop, or at least pretty much got hammered with their earnings after the pretty big pullback. ConocoPhillips was down on a miss this morning. Oil is now up. It looks like Saudi is going to do a voluntary cut. Boy, I wish the podcast that we recorded on Tuesday would come out before next Monday because you'll hear our conversations on oil. I don't want to ruin that here, but it's interesting. So lots of stuff could be heating up real soon if you don't pay attention to those 10-year Japanese yields. Pay close attention to them, even if you don't trade it, because it could keep if the carry trade is starting to get unwound, it'll keep upwards pressure on our 10-year yields, which will steepen the yield curve rapidly. We'll take a look at that. We've talked about, and the yield curve, every time it's popped, it's dropped back down quickly, but it could be changing over the next couple months. So, it should be putting some major pressure on the market at some point. Again, we'll be watching for a secondary reaction once this pullback is over to gauge any strength and to see if the ever resilient dip buyers can push it up one more time or if it's going to stall out. All right. So far today, besides Bank of England stuff that I already mentioned, we had in the U.S. we had initial jobless claims coming in 2K worse than forecast, so nothing really there. Continuing jobless claims coming in slightly. It's higher than forecast, but in line with consensus and a little higher than previous. Nothing that really moved the market. We have the S&P Services and Composite Index 15 minutes after the cash open. The more important, we have ISM Services. Services employment number, do not ignore that. Services prices number, definitely do not ignore that. It's forecast to come down a little from previous, but still remain relatively high. And then that wraps it up. Tomorrow we have non-farm payrolls. Non-farm payroll print. First non-farm payroll after the July hike. So we'll keep an eye on that. So far this morning, still mega caps are red. Tesla actually got beat up pretty bad yesterday. The chips are getting beat up. I made a misstatement yesterday. I got to correct. I thought where AMD was going to open, it would invalidate the double top that's been triggered and hit the first target. It was not invalidated. The double is still in play on AMD. I misspoke yesterday. Sorry about that. But you see Qualcomm down close to 10%, dragging a lot of the chips lower. So, and guidance warning on, again, a lot of the chip makers are saying the China's recovery isn't as strong, and that's going to put their future results in. That's why they're giving a wider range of projections. They don't know how that's going to play out, but it could be some misses coming up soon. Let's just refresh the sectors real quick. Energy has bounced back with the Saudi cut announcement. Technology and comm services still leading the market lower this morning. FedWatch tool still roughly a pause and then a cut next March. So cuts are starting to come in again. Greed, extreme greed is right at that cusp again. So this is barely putting a dent, although dropping it out of extreme greed. Where did I leave off? Good morning, Connor. Cocoa's going for new highs. So, thank you for being here, Coco. As I said, PayPal, Qualcomm both down. Shopify was down just a little bit. Nothing else. I only looked at ConocoPhillips this morning. But the big thing after the close, Amazon and Apple. Those are the two biggies. Since they are in the Magnificent Seven, that's going to be really help us gauge what the market does with those coming up. So, and then tomorrow, nothing really in terms of earnings, nothing really that's market moving. All right. I have the dollar index up there first. Yesterday, coming up that 62.5 level, not closing. I'm expecting some kind of at least pause or pullback after hitting. We had the major cluster right there, but if we close above the 62.5, even with a pullback, expecting those higher prices. My first target, again, 102.95, then the 103.25 area, then 103.59. So the dollar index could be trying to put in a more substantial bottom on some waning momentum. Cycles still on the weekly basis heading up. So waning momentum on this push down. So we'll keep an eye, especially if they break out of this channel moving forward. Now back to the S&P. We closed below the rotation zone yesterday. So this is the first close below the rotation zone since the breakout back in May. All right, so we could be going, even with a push up, more into a consolidation phase. That's why this next reaction up, does it have to happen today? No, it doesn't. And remember, this was way too sloppy for a double top. I was using the targets, so it would hit, for me, a stop reduction target at this point after the close below that yesterday. So it's an aggressive stop reduction, especially with Apple and Amazon earnings. Is there anything shorter term? We could be setting up for a little mini double bottom going into the open. Again, we had that same kind of setup yesterday. But obviously, this was yesterday. Obviously, we just got the momentum selling. So just because there could be a potential, you got to wait for them to trigger. Because if the momentum takes it down like it did yesterday, with the VIX staying high, you don't want to bottom pick this yet. Where's my key area? If we do have downward pressure and break through the pre-market lows, my major target is this 44.93 to 4,500 area. And then I'll be more substantially watching for a bottom, at least a short-term bottoming formation and more of a bounce pattern. That's what I am exactly watching for. Again, into the open. We really, if this, it has to push down a little more. I don't think this hit the 75 yet from earlier. See, it did not. So it has to get below 45.16. And then it has to trigger. If it doesn't push down enough, then the aggressive area for a breakout would be about 45.27 and then 45.44, and then a return on any bounce. Here are my targets for a bounce, separate from any double targets. Right now, remember, you can have reactions, especially that 4-hour rotation zone, but if we do get a bigger bounce today or possibly tomorrow, 45.53 to 45.62 right now is any bounce bigger, the bigger bounce target. And where would that fit in with? These will probably shift down again, but that's not even to the 50% harmonic unless we push lower. What's sort of interesting is if we push down here, look, we're at 50, and I'm not saying what's going to happen, but if we do, that 50% is right at that second area I'll be watching. NASDAQ. Remember, no double. This didn't get up high enough. It's more with a flagging pattern. So right now, holding against very key support in here. If we did break lower, the two targets I will be utilizing, if we do not sustain these pre-market lows, I will be using about 15.2 and then 15,075 to 15,100 as my two key targets to watch for bounce areas. Other than that, the major resistance, 15,550. 15,550 above there, then I'd be watching for not only the retracement patterns but the top of this flagging pattern. The Dow, which confirmed, I need this to trigger because of the, I'll show you why on the 4-hour. See this double push up here? It was technically a triple on the 4-hour, so you got to go to a higher time frame, and it's still a valid double, but it needs a daily close. So yesterday did not close below it, so there is still a potential double top in the Dow, but it needs a daily close below 35,346. And it's still against the rotation zone, and the rotation zone is even in front of the first target, lower probability one. Russell, Dow, any bounce, I'm just essentially using these little retracement harmonics right now. So on a bounce, the key area is 35,526 to 35,597. If it makes new lows, those levels will drop. The Russell still holding key support yesterday, 1965. If we drop below that, the next support area is down about 1943. And then based off the most recent run-up, we're looking at 1926, and then the major support zone 1903 to 1912. Any bounce, just use your reverse harmonics there. Good morning, Sterling. Hey, Richard. Good morning. All right, the VIX looks like it's trying to put in a top yesterday. As I said on the open, if this thing turned around and started running up again, we were probably breaking lower. Now we've trying to put in some top. If we start backfilling today, I'll be watching at least for choppier price action to possibly slightly bullish. If we start backfilling, especially below the 1659 area. If we run back up, I'll be watching for downwards momentum again, especially after the 9 a.m. Central Time ISM prints. DAX closing, not closing today yet. It's still open for a couple more hours, 3 more hours. We're going to be watching this 15,955. Now, this is getting a little oversold, but if we close below that on any bounce, I'll be watching for the next rollover play and the DAX eventually to retarget the first week of July lows. Notes, very key here. We got below the 62.5, and this is the minor. We tagged the 87.5 yesterday. Today we're down to the lows of early July. So these ones, based off the bigger time frame, we're probably going to head back to 109.27 to 109.18. Yes, we still have a potential double bottom, but a long way off. If we look what's happening though with the yields, look at the yields. This double is almost, or potential double is almost off the table, but I'm focusing on it returning to the 87.5 as I talked about, and it doesn't mean it has to stop there. But this is steep. This is causing the steepening. This is a little different. See, the 2 years are relatively flat. The 10 years, the yields are climbing. So the yield curve is steepening now. So it's going to be real interesting if on any pullback to see if it drops below this minus 79, minus 80 basis points, or if that holds now as key support and we set up for a longer term bottom. Because I really start paying attention as this stuff moves higher with getting into more instability. We already colored for the dollar index. That's going to be another key one to watch. Crude. You'll hear my thoughts in the podcast, but we got the pullback rotation zone. We little bounce off the Saudi cuts. I'm going to be watching for more of a bottoming formation and then a retest of the mid 83 level and possibly a breakout, which would be, again, put upwards inflationary pressure over the next couple months. Gold, still watching right now for the gap fill. and then probably a retest of the lows. Now, longer term, still bullish on golds, waiting for more of a substantial bottoming pattern. Silver, which triggered the double. This did not invalidate the double, and then completing it today. So silver, the pullback has been completed. Does that mean it has to turn around and bounce? Not yet. I'm actually watching to see if it reconnects with the 200 at this point. The 10-year, again, if you have a platform that you can watch it, keep an eye. We had intervention, and it barely put a dent in it. As I said, this is the highest this has been since back in 14. And there's been no move. And the market hates confusion. It doesn't know where, when, and how much the Bank of Japan is going to step in. That's what this is really leading to. And if this starts unraveling the carry trade more and more, you're going to see continued upward pressure on those 10-year yields. The yen, it'll be real interesting to see if the yen breaks above about 145. If the yen breaks above 145, could get pretty interesting also for that. The only thing that would turn this around for me is to trigger this double top pattern. Euro, pretty flat today. The double, or I should say potential double. Nothing going on there. I'll be watching for some kind of bounce. See the pound hit the 62.5. I'm watching for bounces and then more rollover plays in that. Bitcoin still caught in this range here. What else? Can we look at ANET? Let me get through a couple more markets, then we will. Tesla, right in that range, not quite hitting that 50 yet. But going to be watching for that to break, and then 240, especially if we have market selling pressure. Tesla's getting more and more sustaining breakdowns. The numbers out of China aren't real strong, so I'm starting to watch more and more for a bearish setup. But it really, at this point, since there's no great bearish setup, and this would be a horribly sloppy head and shoulders, it's really if it just triggers below 240. Other than that, on any bounce, the resistance is 256, and then roughly about 267. NVIDIA still in the sort of a flagging pattern right now. But if this starts breaking, the 50 is the first key target. I mentioned AMD. I'll get to spires and the Qs. See, here's the stop. It needed to either close above 62.5 or trade above 126.42, neither of which happened and collapsed down yesterday. So that's still the target. The next target is 105.64, then 102. Your spiders and your Qs. Spiders and the Qs. Spiders still 448.57 on any run up. 450.13 would be the first target. The gap to the downside now. The gap to the downside. Let's see. You were going to be looking at 440 right here. 448 about 35. We break below that. We have this gap left behind at 446.02, and the key on the closing basis is 445.45, and then there's another gap back down to 442.46. So those would be the key targets in the short term to the downside. The Qs, remember we sort of have that flagging pattern in the futures. We have the flagging pattern here too. All right, the key areas, it's just below this 50%, so 372.79. But the major area you don't want to see it close below if you're bullish still is 368.99. So that would be, if we do break lower, that's a key intraday target, 368.99. Right now, the prior unfilled gap 372.82. So this is going to probably be filled by a gap down open filling a gap. And then you also have another gap left behind to 368.17. Any bounce now besides to yesterday's close, the next target I would utilize is about 375.65 area. ANET. You really, let's see. We got right in here. I'd be watching about mid 174 on a closing basis. If you start getting back below there, you have a big gap left behind, and this is the key support area. I mean, really, if your last line of the sand for me would be this gap up days low. You start getting a close below that, you got I'd really be watching for that backfill, gap fill, not only because of the gap, but then you see it found resistance here, resistance slightly higher, resistance back at that prior level, ping-ponged back there, sold off, and then with earnings gapped up there. But if it does not hold this area between about 170.30 to 174.40, that's your key support zone. If it does not hold there, I would not be looking to ride this thing for a potential gap fill back down. So that's your downside risk right there. Okay. Other than that, just want to see, come on. I just want to see from the major area where our harmonics are. So at about 190, 189.52, that's their key resistance. If it did manage to sustain this level and break back above this 189.50, the next target would be, and it's 267, but it would just reinforce that 200 level. So there you go. That's exactly how I diagnose this one right now. All right. With that, keep an eye on this. Is this a major technical damage yet? No, it is not. Remember, the rotation zones, which they have not technically reconnected with, are just lower down at that, just behind that 4,500. So this is not major technical damage. It's the biggest pullback we've seen in a while so far, but it's not major technical damage. The markets were insanely overbought. And if you're still going with the Coco principle, he's going to be watching for the big cup and handle, the big old cup and handle. AAPL still hasn't triggered the head and shoulders yet, and then I got to jump into the open. So, nope, it's confirmed it on that horizontal neckline. So we'll keep an eye. This was one, based off this, I'd be watching for a possible bounce play and then a rollover. It's confirmed it based off this, and this is a sort of, still, as we've talked about, a sloppy pattern. But I'd be watching, and then we could see some further short pressure down here. But based off, I try to get initial reward to risk with that 200 for anything to the short side. With that, I shall talk to everyone later. Have a wonderful trading day. Remember, non-farm payrolls and Apple and Amazon after the close. Bye for now.